Kinda interestingly, Minority Mindset originally back in the day started on Udemy. I was working on this other business at the time and I got scammed by this fake marketing company and I had lost a whole bunch of money. And after I lost this money, I went onto Udemy and I created this class. If you're looking for a blueprint on how to build your wealth this year, you are in the right place. Now I know we're in a weird economy, we're in a weird system right now, but there are things that you can do right now to build wealth this year, and that's what I'm gonna be going over, so let's go right into it. I think a lot of people don't grow up talking about money in their households, and if you do grow up talking about money, it's usually in a negative context, like you're talking about money problems and why money is so hard to get and why you can't afford your bills. But if you really want to become wealthy, you have to understand money. And the first way that you can understand money is by talking about money. My parents are immigrants from a state in India called Punjab. And in our culture, money isn't something that you talk about very openly. It's just one of those things that you go to work to earn and then you just assume that money is going to be okay, even though you don't really talk about it. Like I remember when I would talk about, okay, how am I going to take care of myself financially? My parents would always tell me, well, if you become a doctor, you won't have to worry about money and everything will be fine. All you got to do is go become a doctor, earn a big salary, and save a chunk of your money, and everything is going to be fine financially. And that was the extent of my financial education for the first 17 years of my life. My parents are the hardest working people that I have ever met. I mean, they had to literally bust their back to earn a living, to help support me and my brother, and to raise us in a new country, but they never really understood financial education. I mean, this was all they knew. And so they thought that if you wanted to become wealthy, all you had to do was get educated, earn a big salary, and save some of your money. Like most people, they didn't grow up with financial education, and that's probably one of the reasons why I'm so passionate about the Minority Mindset message to help spread this financial education, because this is something that so many people need. I mean, we all need this, but most of us are never taught how to use our money the right way. Now, when it comes to you becoming wealthy, there are 5 money skills that you need to know. The first basic money skill you need is you need to know how to live below your means. This was pretty much the only money skill that I grew up learning, because in the Indian culture, the traditional Indian culture, the whole idea is you make $1 to spend 20 cents. You can compare that to the American culture where you make $1 to spend $2. Now, I know this is a generalization, but this is reality at the same time. Lots of Indian people are cheap. Lots of American people are in debt. I'm not saying that you shouldn't pay people what they deserve. I'm saying that you should be cheap in a smart way by keeping more of your money for yourself instead of spending all of your money. I used to guest teach in Detroit public schools, and one of the first things that I learned by teaching here is that so many kids did not have the basic understanding that you need to live below your means. Because what a lot of people thought was, okay, I go to work and if I make $100, that means I can go out and I can afford a $100 pair of shoes because I got $100 in my bank account. But there's something deeply wrong with that philosophy, because what you need to understand is there's a difference between being able to buy something and being able to afford something. Just because you can buy something, whether you have just the cash in your bank account or whether you can go into debt to buy something, is different than actually being able to afford it. If you only have $100 to your name, you cannot go out and afford a $100 pair of shoes. Yeah, you can buy it, but you cannot afford it. There's a difference between being able to buy something and being able to afford something. The easiest way to remember what you can afford is just by following a rule of 5, which says that if you cannot buy 5 of them, you cannot afford 1 of them. So if we're talking about things that are not essential for you to live, then you got to follow a rule of 5. That way you can understand that you need to live below your means, because when you're living below your means, that means you got some extra cash at the end of every single month that you can put to work to make you more money. If you're spending every dollar that you earn on clothes and shoes and cars and vacations, you will never have a chance to become wealthy, because anytime your money comes in, it goes directly out and it never stays there to build wealth for you. That's why you got to understand number 2, how to allocate your money. If you don't have a plan or a system on how to use your money, you're never going to know how to spend your money when you get it. Like if you went to work today and your boss gave you an extra $10,000 raise today, how would you spend that money? Would you save all $10,000? Would you invest all $10,000? Would you go on a big vacation and blow all $10,000? What would you do with that money? And if you don't have a system in place, you're not going to know what to do with money when you get it. That's why you need to know how to allocate your money before you even earn it. You need to create a system, almost like a funnel, which tells your money where to go. That way, anytime you earn $1, your dollar is going to flow through this funnel, and some of this money is going to be spent, some of this money is going to be invested, and some of this money is going to be saved. One of the simplest ways to do that is by following a plan like a 75-15-10 plan, which says that for every dollar that you earn, 75 cents is the maximum that you're allowed to spend, and then 15 cents is the minimum that you will invest, and 10 cents is the minimum that you will be saving. So this is spending, this is investing, and this is saving. So now anytime you make a dollar, it is going to flow through the system. So you're creating a plan for your money before you even earn it. And anytime you make money, it's going to flow through here. There's three-headed funnel, and some of your money is going to be spent, some of your money is going to be invested, and some of your money is going to be saved. Now what you can do is once you understand how much money you want to save, because you don't want to just save your money forever, you're going to take this extra savings money and you're going to put it here towards your investments. The reason why you don't want to save all of your money is because saving is losing. As you've heard through the news, that the value of our dollar is dropping, you're seeing more inflation, this is causing the price of groceries to go up, this is causing the price of things to go up, this is causing your housing costs to go up, and so the price of things keep going up while the value of your dollar keeps going down. That's why you don't want to save every dollar that you can, because these savings that you're saving are just losing value. Now you want to have some savings to protect you from an emergency, because if your car breaks down, or if your AC stops working, or if your window breaks, you want to have some cash that you can fall back on. That way you don't have to go into credit card debt to fix these emergencies. So you want to have somewhere between 3 to 12 months worth of expenses saved in your savings account. That way if something bad happens, you have cash to fall back on. So if you're okay taking on more risk, then you might only need 3 months worth of expenses saved. But if you want to be really conservative and you want to have that extra cushion, then you can have 12 months worth of expenses saved in your savings account. You got to find that right balance for you. Once you hit your savings target, then you want to stop saving extra money, because this emergency money is only going to be saved and used for emergencies. This is not money that you can use to go out and buy a home. This is not money that you can use to go out and buy a big screen TV when it goes on sale. This is money that you're only going to save for emergencies. After you finish that savings goal, that's when you can start allocating your savings money towards your investments, because this is the money that is going to make you wealthy. The savings money is going to protect you from an emergency. This is going to make you wealthy, and this spending money is what allows you to have fun with your money. The reason why I like this percentage model is because as you make more money, you're going to save more money, you're going to invest more money, and you have some more money to spend too. Because you don't want to just live a life where you feel like you're always holding yourself back and you're never able to have the nice things that you want and that you work so hard for. You should be able to have the nice things when you can afford them, but that means you also got to be investing more money and you also got to be saving more money. But as you make more money, the system will also let you spend more money. So as you have more money, as you make more money, as you have more investment money, well, now you can afford the nice things. You can go on the nicer vacations. You can have the nicer clothes. You can have the nicer car. You just want to make sure you can afford it first. And the thing that helps you understand if you can afford it or not is if you're paying yourself first. Because this is what's going to make you wealthy. When you do this, you are paying yourself first. When you do this, you're protecting yourself first. When you do this, you're making everybody else rich. Now, that's not necessarily a bad thing. I mean, everybody wants to have a nice car. Everybody wants to have nice clothes. Everybody wants to go on vacations, right? It's not bad to pay other people, but when you do that, you just want to make sure that you're paying yourself first. And this is where you got to know how to allocate your money, because when you're allocating your money this way, where you always have money going towards your investments and you always have money going towards your savings in a way where you're saving your money the smart way, and you always have money going towards your spending, but not all of it. Now you're allocating your money in a way that's building you wealth first. Now this brings me to number 3, because once you're allocating your money the right way, you need to know how to grow your money, because what's going to happen is you're going to have some savings growing. You're going to have a bank account with your savings money and you're going to build a savings cushion. You're going to know how to spend your money, because when you have money to spend, you're going to go to the store and spend it. But your investment money is going to be sitting there, and you want to know how to grow this investment money, because if this is the money that is making you wealthy, you got to know how to actually grow this money so you can have that wealth. So let's talk about how you can invest this money so you can build wealth. When you start putting money aside to invest, you're going to want to know how to grow this money the most efficient way possible. That way you can get the biggest returns. And there's a couple of different ways that you can grow your money on a very high level. There's an active way and there's a passive way. An active way is now when you're taking your money and you're putting it to work with your physical self. So you might be using yourself or your time or your labor to grow your money. And here is just you're putting your money to work passively and you're letting your money grow itself. So a couple examples of active investing would be: 1, starting a business. Another is now investing it in your education. So this could mean buying books, buying courses. You're investing in your knowledge. That way you have more knowledge to grow your money or do more things to build more wealth. And this could be things like starting a side hustle, or if you want to go into a little bit more depth, you also have things like stock trading, and you have things like house flipping. So now you're going out and you're buying a home, you're renovating it, and you're trying to sell it. Here, you're trying to find the hot stocks, you're buying them, and you're trying to sell them for a quick profit. All these things require active time on your part in order to make money, because if you're not actively trying to flip houses, you're not going to be making money. If you're not actively trading stocks, you're not making money. If you're not putting work into your side hustle or your business, you're not making money, at least in the beginning parts. And if you're not putting time and money into your education, whether it's through reading books or getting courses or getting consultants or coaches, you're not going to do anything with it, because now you have to put in the time and the work and the money to get this education, then you got to do something with it. For any of these active investments to work, you have to invest your own time. For the purposes of this video, I'm going to focus here on the passive investment side of things, and a couple of the most common passive investments are stocks and then real estate. You also have cryptocurrency becoming very popular as a passive investment, but I'm going to focus on stocks and real estate because these things have many decades of historical data, and so we can talk about this from a passive investment strategy that we've seen work over time. The whole idea with this type of passive investing is you are going to work every single day to get paid, and now when you get paid, you want to take some of your money and you want to invest it. And this investment is going to happen on its own. That way you can spend your time working to get this paycheck, and now your money is also working to make you more money. So anytime you get paid, you're going to put your money to the funnel, and now some of this money is going to be automatically invested to make you more money. A couple places where you can invest that are stocks and real estate. So when you invest in the stock market, you are buying ownership in companies. And so now you're putting your money into this company, and you're telling the Amazon company or the Apple company or the Tesla company or the Snapchat company or the Facebook company or the Lululemon company, you're putting your money into these companies, and now you're letting the executives and the people at these companies work to grow the company and make the company more money. And when the company makes more money, so do you, because then the stock price will go up, or they will pay you a dividend just for investing in the company. So if you invest in the right company and the company makes more money, you will make more money too. Now, as a little disclaimer, there is a lot more to what determines a stock price than just how much money a company is making. But for just a general terms, for what you need to understand for this video is that as a company makes more money, more people are going to want to own it, and that's going to push the stock price up, which will make you more money. So stocks are a way for you to invest in companies and let the companies make you more money. And anytime you get paid, you can just throw your money into the stock market and let these companies hopefully make you more money. With real estate, the whole idea is now instead of investing in individual companies, you can go out and buy properties. Like let's say we're talking about single family homes, and now instead of you going and living in this property, you can have somebody else live in your property and pay you rent. So if you buy a home, you can have someone else live there, and they might be paying you $1,500 a month every single month just for living in your home. Now you can be out vacationing on a beach in Hawaii, and your tenants are still paying you $1,500 a month every single month because they have to pay to live in your property. Now the difference between real estate investing and stock market investing is that in order for you to go out and buy a physical property, it's going to take a lot more cash than it does to go out and invest in the stock market. Like you can start investing in the stock market with as little as $100. With real estate, you're going to need way more cash to go out and buy a property. With the stock market, it can be much more passive because once you invest your money in a company, you don't really got to do anything. If we're talking about investing in real estate, you're going to have to meet contractors and real estate agents and attorneys and accountants. And so you're going to have to work with a lot of different people and property managers and get this property leased out. So there is more work. It can be completely passive once you understand the business. But to get over the hurdle, it's going to take a lot of work. So there's different kind of business models with real estate investing and stock market investing, and you have to find what's right for you. Here, you're getting more cash flow. You're buying, anytime you buy a property, you're buying like little streams of income. Here with the stock market, many times you're trying to get this future appreciation. Yeah, you can buy cash flow in the stock market with dividends as well. But when most people are investing in the stock market, they're looking for stock price appreciation. They're looking to invest their money today, and they want to see the price of their stock grow. The key for either of these to work for you as a passive long-term investor is you have to invest your money for the long term, and you have to just keep constantly putting money into your investments. That way you have more money to grow. And so that's why anytime you get paid, you want to put more money into your investment account, and whether this money is sitting there waiting to be invested or actually invested, you want to make sure you keep compounding investments so your money keeps growing and you keep adding more money into the fire. That way you have more money to grow. Now, if you are interested in learning more about money management and investing, our team put together an amazing money management PDF that walks you through some of the things that you need to know. This PDF is completely free for you to download when you sign up for our free daily newsletter. And I got the link to how you can get a free PDF in the description below. Now that you know how to live below your means, and you know how to allocate your money the right way, and you know how to grow your money by constantly investing your money into the right investments, it's time for you to know how to spend your money the right way. We already talked about the difference between being able to buy something and being able to afford something, but it goes a little bit deeper than that. Because even if you can afford something, many times you might not know how to buy something the right way. If you want to understand this, you got to start by understanding how the system works. Because a business's job is to sell you something, and a bank's job is to lend you money. And so if a business is not selling you something and if a bank is not lending you money, they are not making money. So they are very incentivized to sell you things and to sell you money. And so this is where you got to understand what you're doing, what you're buying, and how you're buying it, that way you're buying things the right way. A couple things that are becoming extremely popular now are buy now, pay later, or as we like to call it, broke now, broke later, and 0% APR financing. Both of these kind of act the same way. Essentially, you can go out and buy this $2,000 TV today, but you don't have to spend all $2,000 today. You can just pay it off in installments over the next 12 months, and if you do that, you don't gotta worry about paying any interest on this $2,000 TV. Now, at first glance, that seems like a no-brainer, because now instead of you spending all $2,000 today, you only gotta spend a couple $100 today, and now you can take the extra $1,800 and invest it and let your money grow, and now you can just pay this money off over the year. What's the big deal? Well, let me just put it this way. There's a reason why 0% APR is so profitable for banks. When you start jumping into the 0% APR and the buy now, pay later hoops, you don't realize the pain of actually spending money. Because yeah, you bought this $2,000 TV, but you didn't have $2,000 actually leave your bank account. You only had a couple $100 leave your bank account. And yeah, if you pay it off over the year, you're only going to pay $2,000 and you don't have to pay any extra interest. But what happens is people don't feel the pain of $2,000 leaving. So what do? So now you're going to go to the store, now you're going to buy some nice furniture. Because you have more money, you can buy nicer furniture, and you can just do buy now, pay later, or 0% APR on that. And now you can go out and buy a nice computer, 0% APR, buy now, pay later. And so now you have the ability to spend more money because you still have more money in your pocket today. Now you're playing the payments game where yeah, you're paying 0% APR, but you're spending way more money than you would have if you just had all that money leave your account today. Everybody says, yeah, I'll just finance this TV over 12 months, pay 0% APR and invest the difference, but nobody ends up investing that money because everybody ends up spending that money. So now businesses make more money because now you have more money to spend today. And what ends up happening for a lot of people is because you spend so much money, you're not going to have the ability to pay it off in time. And now you are going to get slapped with huge APR fees after this 0% APR trial ends. And now banks make a killing too. I don't want you to play that payments game. I want you to be smart with your money. Buy the things that you can afford with cash. That way you don't got to worry about financing. Debt can be okay if it's making you money, but your big screen TV isn't making you money. Once you get to here and you know how to spend your money the right way, you're really going to be on your path to building the wealth and developing the wealth. And this is where you got to make sure that you know how to protect your money and your wealth. Here's the reality, whether you like it or hate it. When people realize that you have money, they're going to try to take their hands, put it in your pockets, and take some of this money for themselves. That's why you want to make sure that you have proper shields put up to protect you, to protect your finances, to protect your wealth, and to take care of your family. Because if you can't take care of yourself, you can't take care of your loved ones or your community. One of the first things that you want to do when it comes to wealth management is have an estate plan in place. If you were to die, what is going to happen with your money and your assets? How is it going to be distributed? If you don't have a will or a trust or any of this estate planning in place, then the state is going to come in, the government's come in, and they're going to tell the world how your money should be spent. You do not want the government deciding how to spend your money, so please go and talk to an attorney or just do some basic estate planning. That way you have a plan for your assets after you pass. The next thing is you want to make sure that you have insurance set up the right way. And insurance is not something that anybody likes paying, but it is a necessary cost because it's a small price to pay today to protect you against a huge headache in the future. These are things like home insurance and car insurance and health insurance and life insurance. Home insurance, car insurance, and health insurance are pretty self-explanatory, and everybody knows why they need them. Life insurance isn't always so self-explanatory. The whole idea behind life insurance is you are buying insurance against tragedies. Because if you were to unexpectedly pass and you are a breadwinner for your family and your family lost your income stream, you want to make sure that your family will still be okay without your income. And life insurance is what allows you to do that. Because life insurance, the way it works is you buy this policy, and if you were to die during the life insurance period, then the life insurance company would come in and they would give your family a big check. That way at least your family would be okay financially. The thing that always breaks my heart when I see it is when you see this tragedy happen. Somebody dies unexpectedly, and then the family has to go up and they have to start a GoFundMe page to raise money to cover funeral costs, to raise money to pay their bills, and to raise money just to be able to live their lives like normal. It is so hard enough to lose somebody that you love, and then to have to go and raise money in order to just keep living your life. I mean, it's very difficult. So if you want to avoid at least that financial part of the tragedy, because tragedies are unpredictable, the way you can do that is through life insurance. The good news about life insurance is it doesn't have to cost you a lot of money. Like if you are a healthy 30-year-old guy, you can get $1 million life insurance policy for less than $1 a day. Now, I'm not going to go too deep into life insurance in this video, but our sponsor Policygenius can help you get a free life insurance quote. And again, like I said earlier, the reason why I like Policygenius is because they stand by what they do. And if you can go out and find a cheaper life insurance quote anywhere else, they will pay you $100 for wasting your time. So if you want to learn more, see why life insurance is important, see if it's good for you, and see how much life insurance would cost you for free, I got the link to how you can do that with our sponsor Policygenius in the description below. Now, once you have the keys to actually building wealth, because now you know how to live below your means, you know how to allocate your money, you know how to grow your money, you know how to spend your money, and you know how to protect your money and build your wealth, now it's all about doing it. We're going to jump back into the video in just a second, but before we do, I want to tell you very briefly about Market Insiders, our investing coaching program. If you've been thinking about investing your money into the stock market, the real estate market, or the cryptocurrency market, and you're looking for some extra guidance, this is what Market Insiders was created for. It is not a class. Market Insiders is a coaching program where every week you get access to a real estate class, a stock market class, and a cryptocurrency class, which is live, led by one of our investing coaches. Our investing coaches are not investing gurus. These are real investors who have been investing for years, they've gotten great returns, and they have the money behind them. I'm talking about hundreds of thousands, if not millions of dollars invested themselves, and they're teaching from their experiences and their failures. That way you can learn from them every single week. Now, the cool thing about Market Insiders is you get access to more than just the weekly coaching. You get the weekly investing coaching, you get access to all of our previous recordings, you get access to our investing classes, and you also get access to our private Discord community. That way you can chat with other investors. So if you're trying to get started as an investor in the stock market, the real estate market, or the cryptocurrency market, or you're trying to figure out how you can be a better investor and get better returns, then Market Insiders is for you. That way you can get that kind of handheld coaching guidance, because now it's not just a class where you're going to be left hopeless trying to figure it out for yourself. Every week you're going to get access to stock market, real estate, and cryptocurrency coaching sessions, and it's all included. Now, if you're skeptical about all this, I get it. That's why you don't have to pay a penny today. You can try out Market Insiders for free with our 10-day trial. During the 10-day trial, you'll get access to everything. You can join the coaching calls, you can watch the previous recordings, you can attend the classes, you can go through the Discord and chat in there, you can ask your questions, and then you can see if it's right for you. If during those 10 days you realize, I hate this sucks, well, then you can quit and it's not gonna cost you a penny. But if you go through it and you say, wow, this is amazing, I'm blown away by the education, well, then you can stay. And if you decide to stay, it's not gonna cost you an arm and a leg. Market Insiders cost less than the cost of going out to eat. It costs less than $30 a month. So if you wanna try it out, I'll put the link to how you can learn more and join Market Insiders with a free trial in the description below. It was very important to me that you feel comfortable investing in your financial education. That's why I wanted to make sure that you had nothing to lose and everything to gain, which is why if you wanna learn more, you can get started with a free trial. That way you don't have to commit to spending a penny until you know if it's right for you or not. So if you want to learn more and try out Market Insiders and see if it's right for you, I'll put the link to where you can get started with your free trial in the description below. As millions of Americans lose their jobs, traditional office jobs are dying out while work from home jobs are booming. But there's a lot more to working from home than just calling one of those ads on the side of the road. Wait, so you're telling me that I have to pay you $250 a month so I can work from home for you. You need to know where you can find a good work from home job. You need to know the different types of work from home jobs that there are, and you need to know how you can find a job that fits your talents and that's going to pay you the most money. So if you are looking for a work from home job, or you were thinking about looking for a work from home job, make sure you watch this video until the end because you don't want to miss any of these key details. But before we get into that, hit that thumbs up button below, because if you don't, well, the way the YouTube algorithm works, YouTube will be less likely to show you any of our other financial news and education videos. You want to start your work from home search by looking for jobs in reputable places. You can start by looking at work from home job boards. This would be sites like weworkremotely.com under their Find a Job tab, and remote.com under their Remote Jobs tab, and flexjobs.com under their Find Jobs category. If you're looking for the most flexible work, then you should be looking at freelance sites like upwork.com, where you can create an account and then you can bid for jobs that you want to do, or freelancer.com, because you can do the same thing. You create an account, then you find a job that you want to do, and then you can bid for it. If you don't like any of these options, then you can go to a regular job posting site like Google's job search, and then you can hit that work from home button. That way you can filter out all the work from home jobs. Now, these are the different places where you can find work from home jobs. But if you just jump in and start applying blindly, you're just gonna get rejected again and again and again. So you wanna make sure you understand the different types of work from home jobs out there, and you wanna know how to align your talents with these jobs. That way you can make the most money while working from home. Here are a few options that you can look for even if you don't have a degree, or if you're looking to change your career path. You can be a remote ESL, or English as a second language teacher, and remote ESL teachers make on average between $34,000 and $60,000 a year. Again, this is gonna come down to your lifestyle. If you're looking to work on your own terms and on your own schedule, you might want to check out a site like Cambly, because Cambly is a place where you can go and teach people English around the world, and they will pay you to do that, and you have more flexibility to work on your own schedule. If you want to make more money, then you should consider becoming a remote salesperson, because according to ZipRecruiter.com, the average remote salesperson makes $51,000 a year. With sales, the more experience that you have and the better that you are at selling, the more money that you can make. Because if you have a lot of experience selling, you'll be more likely to qualify for specialized sales jobs, and then you have the ability to become a sales director or a sales executive, and then you can make a whole lot more money. If you're looking for sales jobs that allow you to work remotely, you can check out websites like rainmakers.com or salesjobs.com. The good thing about knowing how to sell is once you know how to sell, you can carry this knowledge into any industry and any business. If you have a little bit more technical experience, you can consider being a remote content writer, or a remote web developer, or a remote designer, or a remote financial bookkeeper. So let me give you a little bit of personal experience on this, because Minority Mindset, our company, has a team of people working for it. Some of them are remote and some of them are not remote. So the writers that I have that are remote, that are making full-time salaries, these are people that I typically find off of freelance websites like Upwork and Freelancer. And these writers, when I look for them, I'm typically looking for people that have really good experience and understand SEO and the real technical side of writing. The writers that work in our office, although we're all work from home right now, but the writers that typically work in our office, these are people that I want to be able to train and be able to kind of develop their voice. That way they can write things a specific way for our brand. So when you're trying to work remotely and you're trying to make a full-time salary, you have to price in your experience. If you're brand new to this, you need to price that in. That way you can build your experience and build that expertise. That way you can work up to the higher paying clients, because once you can get there, you will have clients that pay you every single month, and you won't really have to spend any time trying to find new clients. Here's the good and bad about working from home. The good is you get to work from home. The bad is you're competing against people from around the world. So when I'm looking for a work from home writer or whatever position, and I want somebody good, I am going to find somebody good, because I can find somebody on the West Coast or the East Coast or wherever, because everybody in the country is competing for these jobs. I'm not saying this to intimidate you. I'm saying this so you understand how the process works. And the good news for you is once you master your craft, you can charge a whole lot more money for doing not that much more work. Like, I know designers that are charging hundreds of dollars an hour just to do basic designs. So if you are looking to scale how much money you make while working from home, and you want to get into that 6-figure or even potentially that 7-figure salary, then part of your work needs to be learning how to master your craft. Work from home is here to stay. The majority of Americans say that they want to continue working from home even after this pandemic ends. Now we've talked about where you can find work from home jobs, and we talked about some of the different types of work from home jobs out there. Now it's time to decide how you can find a work from home job that's going to fit your dream extreme lifestyle. If your goal is to only work a few hours a week and to work when you want, however you want, and set your own schedule, and you don't want to deal with a traditional boss, then freelancing is probably the best option for you because you don't have a traditional boss and you get to set your own timing, your own hours, and your own price. The hardest part is getting started because you're going to have to go out and bid for jobs, and you're going to have to go out and get your name out there, and you're going to have to build your reputation and get the reviews. That way you can start making more money per job that you do, and that way it's easier for you to get the jobs because people know that you are reputable. But once you build that trust with your clients, this is the option that's going to give you the most flexibility. If you're looking for a more steady work schedule, because I know there's a lot of people out there that like that schedule because you feel like, okay, when I work 9 to 5, I have more of a routine in my life and I feel like I'm doing things properly and I'm getting more done. Well, then you should be looking for a more traditional type of job because now you'll have a team that you work with and you'll have to clock in at a certain time and you can be done at a certain time. But the good part is you can work from home, so you can work anywhere in the world. If this is what you want, you should be looking for more of your traditional jobs that give you that work from home opportunity. And if you're looking for the option that's going to give you the most creativity and the most upside financially, besides just mastering your craft and being a freelancer, then you should look into starting your own business. Now, while this comes with the most upside, this also comes with the most risk. The internet is great because now you have access to the whole world literally on your fingertips. What are you really good at? We all have our own talents and we all have things that we really like doing. Like some people enjoy cooking, some people really like working out, and some people are really good at folding clothes. If you could turn your passion into a product, maybe it's cookies, maybe it's a workout supplement, or maybe it's a clothes folding tool, there's your business idea. If you don't have an idea for a physical product, then teach people what you know. You might think that folding clothes is easy, but there are some people in the world, like me, who are always getting yelled at by the way we fold our clothes. You can take your phone and literally just turn it on and record yourself doing whatever it is you're doing, and now you can teach people, you can teach the world what it is that you know how to do. And if you're not a camera person, then you can go onto your blog and write it there, or you can go onto podcasts and talk about it, or you can go somewhere else and just put this information out there because the world is yours for the taking. As somebody who has a little bit of experience in this internet space, let me tell you what's going to happen. At first, nobody is going to watch you and nobody's going to care what you do. Actually, you might try to keep your new business idea a secret from your friends for a little while, but then eventually one of your nosy friends is going to see what you're doing, and then they and all of your other friends are going to find out, and they're going to think that you're really weird for making videos and writing articles on how to fold clothes. Alright, YouTube fam, I want you to take your dry t-shirt and hold it right here at the shoulders and then flip it, fold it, and voila! Now you have a freshly folded shirt. But if you stick with it and you continue to put out content because you actually want to help people and you want to educate people, people are going to notice, and eventually people are going to start paying attention to what you're doing. Once you build an audience of people that are looking at your content, now there's no limit to the different ways that you can make money. You can show advertisements, you can get sponsors, you can create your own clothes folding tool. The opportunity now is all yours. Here's the reality. Work from home is not going away, okay? This industry is going to be booming for at least the foreseeable future. So if you want to be able to work from home, you got to figure out what you want to do, and then you got to find an opportunity that's going to fit your lifestyle and allow you to live the life that you want to live. If I told you that I am budgeting my money right now, that way I can live off of $7,000 a year, you're probably going to think that I'm never going to eat guacamole again, or I'm going to live in a box, or I'm going to move to a third world country. But here's the thing, about 50 years ago, if you were living off of $7,000 a year, you'd be living pretty decent. I mean, $7,000 a year 50 years ago is like $50,000 a year today. This is where people think about building wealth and retirement and financial freedom all wrong, because people always talk about, okay, when I become financially free, my goal is to be able to live off of $50,000 a year. But your $50,000 a year that you're thinking of is today's money. $50,000 a year today is very different than $50,000 a year 50 years from now. Just like how $7,000 a year today is very different than what $7,000 a year was back 50 years ago. So when we're talking about building wealth and investing your money for retirement or this financial freedom or whatever you want to call it, you got to understand two things. One, you got to understand how your money works, that way you're using the money the right way. And the second, you got to know how to invest this 15% and why you need to be investing this 15%. When the majority of people think of money, they relate it to stuff. how much stuff can my money buy me? If I make $1,000, what is this $1,000 worth? If you ask the majority of people, you relate $1,000 to how many nights can I go out, how many vacations can I go on, how many nice clothes can I buy, how many times can I buy extra guac? So the majority of people, when you think about money, is what stuff can I buy? The reason we call ourselves the minority mindset is because we think differently than the majority of people. When I want you to think about money, I want you to think about money in terms of how many assets can you buy. An asset is something that makes you money. And so now when you have $1,000 or $10,000 or $100,000, I want you to ask yourself, okay, now that I have this cash, how many assets, investments can I buy, which are things that are gonna make you more money? When I was younger and I made money, the question that I had was, how can I use this money to improve my car? I started by tinting my windows, and I got new rims, then I got subwoofers put in, then I got all this other stuff put in, and it was always this kind of like balance of, okay, I made $1,000, what can I do to my car? Ooh, I made $2,000, how can I upgrade my car? So anytime I made money before, it was, how can I spend this money in a way that's gonna better my car or whatever I have? This completely changed when I started investing in real estate, because after I bought my first real estate investment property, it was making me something like $250 a month in profit every single month. And once I got it up and running and going, it was $250 a month passively, which means I wasn't doing any work. Every month, $250 was being deposited into my account. Now, all of a sudden, the way I thought about money completely changed, because now I'm thinking in terms of houses and real estate instead of cars. Because now in my mind, I'm thinking, okay, if I can make $250 a month from one property, that means from 2 properties, I could make $500 a month. With 10 properties, I can make $2,500 a month. With 100 properties, I can make $25,000 a month every single month passively without me having to do any work. As you grow, you'll start to realize that there's easier ways to do this. Like, you might not have to buy 100 single family homes. Maybe you can buy an apartment complex, and some properties are going to pay you more per unit than others. But in general, that mindset is true. Now I'm thinking about assets instead of liabilities. I'm thinking, okay, when I make money, what investments can I buy? What assets can I buy? How can I use my money to make myself wealthier? How can I use my money to build more assets? How can I use my money to create more value instead of just using my money to spend on nice things? You want to have your nice things, I understand that. But when you make money, I want you to think about it in terms of assets instead of liabilities first. Once you start changing the way you look at money, it is going to be so much easier for you to start investing your money and put more money aside to investing, because before, putting this money aside was a chore, because now you are sacrificing a nicer car, you are sacrificing another vacation, you are sacrificing all these nice things. But now you're not making that sacrifice. Now you're working more towards your goals of buying more assets, because that's the way you're looking at money. Now you look at money as a tool to buy you more assets, which allow you to have nicer things. But now when you change the way you look at it, it's easier for you to make more of these sacrifices to buy more assets. That way you can have more freedom, have more wealth, and then ultimately have more of the nice things, the nicer cars and nicer vacations. Now let's get into the numbers, because if you're subscribed to our channel, chances are you've heard me talk about our 75-15-10 plan, which says for every dollar that you earn, 15 cents is the minimum you should be investing, 10 cents is the minimum you should be saving, and 75 cents is the maximum you should be spending. Now I'm going to go over that 15% investing, why 15%, and what the numbers actually look like when it comes to building your wealth. Here's the thing. Investing is the real secret to building wealth for regular people. It is not building the next Amazon. It is not finding the next hot stock before it pops. It is not winning the lottery. It's not having a job that pays you $1 million a year. Yes, these things can help, but they are the exception to the rule. They're not the rule. So if you really want to build wealth, the secret is investing your money. And the issue here is so many people are not doing this, even though I think we should know this by now. It's hard because on one hand, we're never taught about money. Like, we don't go to school learning about how money works, how budgeting works, how investing works, how to build wealth. And on the second side, we just don't really have kind of a good financial culture when it comes to spending, because we live in this debt culture where it is completely normal to finance your wardrobe. And so this is kind of the culture that we live in. And the only kind of financial education that people get nowadays is you go to your job, and then your job gives you this packet which says, here's your 401k information. That's why right now, half of America is not investing any money, not a single penny at all. And on top of that, the people that are investing, most of them are only investing their money in their 401k, even though your 401k was never intended to be your sole retirement or investment plan. So if we kind of diagram this out, if this pie represents America, that's a very lopsided pie. If this pie represents America, only half of these people, so these people are not investing any money. Only half of these people are investing any money at all. Now, out of these people that are investing any money, the majority of these people, so something like this, are investing their money only in their 401k. This is the only people that are investing their money in their 401k and out of their 401k. These are the only people that are creating their own wealth and retirement outside of what's kind of just given to you. Out of these people that are only investing their money in their 401k, which was never intended to be your sole retirement or wealth building or investment tool, out of these people, the average 401k contribution is just 7% of your income. So you have a huge chunk of Americans that are not investing any money. And then you have this big chunk of people that are investing their money, but they're only investing their money in their 401k, and the average contribution is just 7%, which means you have only a few percentage of Americans that are investing more than 7% of their income every single year towards their wealth, towards their retirement, towards their financial freedom. If you really want to become wealthy, you got to invest more than 7% of what you're making. Now, let me show you why investing a minimum of 15% of your income is so important. Let's assume that now when you're 21 years old, you go out and you get a job paying you just $30,000 a year. So you are making $30,000 a year, and let's assume that you're investing 15% of your income every single year before taxes. So that means you are investing right around $4,500. So I'm also going to assume that you're working a job where your salary is going to grow over time, and let's assume that your salary just grows by an average of 3% a year. Now, I know over time, hopefully, your salary will grow by more than this, but let's assume just 3% a year, because sometimes you're going to get a raise, sometimes you're going to go to a new job, maybe you'll get another bump there, maybe you get a promotion, but every single year you get a 3% annual bump, and as you continue to make more money, you continue to invest just 15% of your income. If you do that between the age of 21 and 65, you are going to save, so at 65, you continue to do this, you are going to put aside $400,000 over these 44 years. Now, if you just save this cash and you started living off of, let's say, $30,000 a year, then this $400,000 would last you about 13 years. After 13 years, this $400,000 would go away, but you also got to remember that this is $400,000 about 44 years from now. This $30,000 a year in 44 years is not going to have the same value as $30,000 today. I mean, by the time you're 65, if you continue to grow your income by 3% a year, you're going to be making more than $100,000 a year. So if you want to continue maintaining your lifestyle at 65, that means you got to pull out $100,000 a year here. So your money's only going to last you 4 years. By the time you're 70, you're going to be broke. So this saving model doesn't work, which is why I want you to invest this 15% a year. If you invested this 15% a year and this $400,000 went into your investments, and you got a below average return for the course of your life, and you only got a 4% annual return on your money. If you were able to get a 4% average return on your money over your lifetime, then this $400,000 will grow to right around $900,000. Quite a bit more, but you gotta remember, this is still quite a bit below average. If you got an average return of 7% a year, then this $400,000 you invested over your time would grow to $1.9 million on the side for you to now use however you want. And if you could grow your money by 10% a year, which is just a little bit above average, especially when you account for inflation, then your money would not grow to $1.9 million, it will grow to $4.8 million. But the only way this is going to happen is if you're investing 15% of your income every single year. Now look, this is where you got to really understand money, because so many people make this mistake that when they're planning for wealth or retirement or financial freedom, they're thinking in today's dollars. They're thinking, okay, I'm young today, I'm hoping that I can live off of $30,000 a year or $50,000 a year or $100,000 a year, because they're relating that to today's money. But $30,000 a year today is not going to be the same as $30,000 a year 45 years from now. That's why your income is hopefully going to be adjusted with inflation and go up by a couple percent or a few percent a year. If you are 21 today and you're making $30,000 a year, by the time you're 65, if your income grows by 3% a year, you're going to be making something like $106,000 a year by the time you're 65. So if we assume that $106,000 is what it takes for you to keep the same lifestyle at 65 as you do in 21, that means you got to be pulling out $100,000 a year when it comes time for you to retire in order to keep the same lifestyle that you have today. Now, depending on how much money you're making, that might seem like a whole lot of money or not enough money, but what you got to understand is that in 45 years, $100,000 a year is not going to be as much as $100,000 a year today. So you got to kind of plan for that with your money. And so if we're looking at this kind of income and you're thinking, all right, if I want to maintain my lifestyle, I got to be pulling out $100,000 a year. If you have $400,000 sitting there, that's not going to cut it. You're not going to have a very nice retirement or financial freedom because after a few years, you're broke. Now here, if you get the 4% a year, now at least you have some more money. And what you got to also understand is because this money is invested, you're hopefully going to continue growing it after you start pulling money out too, because you're not going to pull out all $900,000 at once, at least hopefully not. You're going to pull out $100,000, let the other money grow, pull out another $100,000, let the other money grow, and kind of go on like that. That way this can last you more than 9 years. And here, assuming you can just get an average return, now you really have money put aside for the rest of your life, because now you got money for at least the next 20 years. Because even if you're pulling out $100,000 at a time, that means you have your money growing for another 18 years after you pull this money out. So you pull out $100,000, your money continues to grow the next year because you only pulled out $100,000, you still got $1.8 million in there. Then the next year you pull out another $100,000, you have $1.7 million growing for you. So as long as you got money in the account, your money will continue to hopefully grow. I want you to be an aggressive investor. Actually, I need you to be an aggressive investor, because Social Security is becoming a thing of the past and pensions are becoming history. And so if you want to be able to take care of yourself and take care of your wealth and take care of your family and your finances, you got to be the one to put it in place, and you got to be the one to start taking action, because you cannot rely on the government to take care of you, because the government national debt is skyrocketing. They have their own problems. It is very hard and very painful to rely on somebody else, especially the government, to take care of you, which is why I want you to be an aggressive investor. That way you can take care of yourself and take care of your wealth. That way you can live your life the way you want, not worrying about what the government is going to give you. Now, there are different ways that you can invest your money. That way you don't have to actually sell your assets in order to have money in your hand. Like if you invest in rental properties, investment real estate, now you're creating passive income, cash flow. That way you can get cash in your hand every single month without you having to actually sell a property. And if you're investing in dividend paying stocks, now you're making money every quarter or every year from your stocks, and you don't have to actually sell your stocks to get paid. But I'll get to that in just a second. Now here's the thing, most people don't start investing their money as soon as they turn 21. What you need to understand is the older you are, the more aggressively that you need to invest. Just because you're older and haven't started yet doesn't mean that you can't start. It just means you got to be a little bit more aggressive. There's in general two different ways that you can invest your money. You have one way of investing your money, which is through retirement accounts. This is through things like a 401k or an IRA. And then the second way that you can invest your money is through non-retirement accounts. This is through creating your own stock brokerage account and investing your money in stocks, or through investing your money in physical real estate, not through a retirement account. And so this is money you're not doing in a retirement account, versus retirement accounts, they can give you some tax benefits. The whole purpose of a retirement account is literally to help fund your retirement, because when you invest your money in these accounts, you can kind of get a tax deferral right now, and then your money can grow tax-free until it comes time for you to retire. Unless you use a Roth, then you're paying taxes today, and then you don't got to worry about taxes when it comes time for you to pull your money out. I'm not going to get into too many details on this, but the whole purpose of this is for you to invest your money. That way it can grow tax-free, but you cannot touch your money until it comes time for you to retire. If you want to learn more about that, I will link a video where I've already discussed this in the description below. The point that I'm trying to hammer home here is your retirement accounts are typically not enough, because your 401k and IRA has limits, and you got to make sure now that you're not investing your money based off of what the government limits you at. You got to be investing your money based off of the way you want to live your life in retirement. That's why I say a minimum of 15% of your money needs to go towards your investments. Some of that money can go towards your retirement accounts, but if that's not hitting the 15%, then you got to be investing your money on your own too. That means maybe you got to create your own stock brokerage account, or maybe you got to start investing in your own physical real estate. That way you can get passive income. But here, you got to know what your goal is first. If you want to see your money grow quickly and you don't mind taking on more risk, then you should consider investing your money in the stock market, especially in growth companies and these kind of more startup companies where these companies are trying to grow as quick as possible, as fast as possible. There's more risk involved because startup companies can fail and they might not work out, but you have the opportunity to see your money grow a whole lot quicker because these are companies that are working really hard to grow as big as possible and as fast as possible. If you just want to see slow and steady growth in your money, then you can look at investing your money in more blue chip companies. These blue chip companies are your bigger established companies that have already been there for a long time. They already have their systems and you're just investing your money in this company. That way you can see your money grow slowly. The advantage with this is you have less risk because these companies are already established. You already know how they're making money and you can kind of reasonably predict how much money they're going to make and how fast they're going to grow. So you have less risk and so you get lower potential returns. One thing that I do want to mention about investing your money in the stock market is that the stock picking game is not for most people because picking stocks requires a lot of work, a lot of research, and a lot of upkeep. If you're not willing to do that, then instead of investing your money in individual companies, like trying to find the next Amazon or Google or Facebook, then what you can do is invest in something called a fund, like an index fund or an ETF, because these funds give you exposure to a whole bunch of different companies, and so you have less risk, you can put in less work, but now you're kind of growing with the stock market. I already made a video where I talked about that, so if you want to learn more about how to do that, I will link it for you in the description below. If you're looking for income, where now you can create cash flow or passive income coming into your account every month or every year, where now you can have money in your hands without selling your assets, then you want to be investing your money in things like dividend paying stocks, because dividend paying stocks typically pay you a check every 3 months. Or you can invest your money in real estate, because now if you own a house or you own an apartment complex, now every single month the people that are living in your real estate or using your real estate have to pay you rent every single month because they're using your asset. So now when you own these assets like a dividend paying stock or rental properties, now you're making money consistently without you having to physically sell your asset. Real estate is also a really good store for your money, because if you have a lot of cash and you want to put it somewhere safe, then real estate is a good place to do it, because now you own something physical and tangible that you can see, feel, and touch, and that's creating income. Now I know real estate prices don't always go up. You could see a real estate crash, but in general, if you own a property in a good area, then you own something that people need, that something want, and that you can see, feel, and touch. The key for any of this to work though is you got to be consistent and you got to keep investing your money, because investing is not a one-time thing. It's not like you can just take $10,000 and throw it in the market or go out and buy one investment property and say, all right, I'm done investing now. It doesn't work like that. You gotta keep investing your money consistently if you wanna continue to build your wealth. Yes, if you see a market crash, then come and buy as much as you can then, because that gives you the opportunity to buy assets for pennies on the dollar. But in general, you gotta keep consistently investing if you wanna build this wealth, because you gotta keep putting more and more money towards your investments. Now, for a lot of people, they don't wanna be in the game of trying to find the best companies and do the research and find the best time to come in and buy, which is why I say do it every time you get paid. Just create a system. Anytime you get a paycheck, 15% of that should be automatically invested. That way it kind of happens without you having to think about it, and that way you don't accidentally spend this money. There are apps out there that can automate this whole process for you. That way anytime you get paid, a portion of your paycheck will automatically be invested into whatever funds or stocks that you want it to go to. That way your money is constantly just going out without you even seeing it, and that way you're not even tempted to touch your money. If you want to learn more about how to actually do that, our team wrote an amazing article on our website, theminoritymindset.com, and I'll link it for you in the description below. Building wealth is really a game where you got to juggle time and how much money you have to invest, because the more time that you have on your side, the more your wealth can compound and the bigger your wealth can grow, and the more money you have to invest, the faster that you can grow your wealth. But the tricky thing about this, if you look at it practically, is most of us make more money when we're 50 or 60 than we do when we're 21. And so you kind of get more of your money towards the end of your career, but you have more time in the early part of your career, which is why you got to balance it out. You got to start investing aggressively early. That way you can put more money and have the time on your side. That way you can kind of grow your money and have more money working for you. And as you start to make more money, you continue to keep investing 15% of your income month after month after month. That way you can continue to compound that wealth and continue to keep growing your money. Again, don't take what I'm saying as the ceiling. I want this to be the floor, because right now the average person is investing nothing or very little. I want you to kind of up the minimum and make it so you're investing a minimum of 15% of what you make. Once you get the hang of that, then up it up 20%, maybe 25%, depending on what you're making. The more you can invest, the faster you can build that wealth, and the faster you can build this wealth, the more assets and income that you'll have That way you can live the life you want without worrying about the price, because you got your assets producing income which can fund and buy you whatever it is you want. The whole idea of passive income is where you can make money without having to physically go to work. When you go to work and you get paid, this is called active income because you're having to actively do work in order to get this check. Passive income, on the other hand, is when you send your money off or you do this thing, you have this kind of asset that is paying you with passive income because you own this thing or you've created this thing. You have this machine that's printing money without you having to actually physically go to work. You have two kind of general categories of passive income. You have true passive income, where you just buy something and you have this thing that's paying you and you don't got to do anything. And then you have this kind of like pseudo passive income, where you have to put in a certain amount of work to create this thing or have this thing, and then once you create it, then this money comes passively. The reason I'm making this video particularly is because I released a video on YouTube where I talked about different passive income ideas that you could do with less than $1,000. That video got a lot of love, and so I wanted to expand upon that topic by going over 25 different passive income ideas that you can start today, even if you don't have a whole lot of money. The first passive income idea is by investing in dividend paying stocks. This is a type of true passive income. So some of the biggest companies in the world trade on the stock market, and you as an investor, as a regular person, have the opportunity to be one of the owners of these big companies by investing in their stocks on the stock market. Now, some of these big companies will have a lot of cash in their bank account at the end of the year, and there's three things that they can do with this cash. They can save some of this cash for emergencies, they can invest this cash back into their company, or they can reward their shareholders, you, the investor, by just giving you a check. This passive income that a company pays you is called a dividend, and most companies that pay a dividend pay out their dividend every 3 months. So if you invest in a dividend paying company, every 3 months or so, you are going to get some cash deposited into your account for doing nothing except owning a company that pays a dividend. Not every company pays a dividend, so this is something you got to do a little bit of research on, because the companies that typically pay dividends are your bigger and more mature companies, because these are companies that don't want to invest all their cash back into their company because they're already big, they're already mature, they're already established, and so when they have all this extra cash in their bank account at the end of the year, they just distribute this to their shareholders, their investors, people like you who own the stock, and that way you can get your dividend without doing anything except just owning the stock. I'll give you a quick example of what I mean. So Verizon pays out a dividend, and at the time of me recording this video, Verizon's dividend is $2.51 a share, which is right around a 4.5% yield. So if you went out and you spent $100 buying the Verizon stock, after 1 year, they will give you $4.50 in passive income. This is purely passive income. You don't got to do anything except just own the stock, and that is in addition to you owning the stock. So if the stock price goes up, that's icing on the cake, because this dividend is something they give you just for owning the stock. Some other popular dividend paying stocks include McDonald's, which is paying out a 2.5% yield, IBM, which is paying around a 5.5% yield, DTE, which is paying around a 3.5% yield, and 3M, which is paying out about a 3.3% dividend yield at the time of me recording this video. The last thing that I want to mention about dividends is the amount of dividends that you're getting from a company does change. Like if a company makes more money, which is the goal, then the amount of dividend that you're getting will hopefully go up. But if a company starts to struggle, then you could see your dividend go down. Number 2, invest in rental properties. This is one of my favorite ways to generate passive income. The way this works is, let's say you go out and you buy a house for $100,000. Now, instead of you living in the house yourself, you would rent this house out to somebody else, another family, and this family would live in your house, and they would pay you rent for, let's say, $1,000 a month, every single month, for them living in your home. The great thing about this is once you own this house, once you own this asset, you don't got to do any physical work to continue getting paid, because now these people that are living in your home are going to have to pay you every single month for living in your property. So once you own the asset, the home, now this home is going to continue producing cash flow as long as you have people living there. The thing about real estate investing, I'll tell you from personal experience, is in the beginning, it is not going to be passive. You have this kind of like hurdle that you have to jump over to understand how real estate investing works. But once you get over the hurdle, real estate investing can be completely passive, because you can pass on all of your day-to-day duties to a property management company. A property management company's job is to essentially handle all the day-to-day stuff with managing a rental property. They will find you tenants. They will qualify your tenants. They will do the background check, their credit check, screen them and approve them and put them into your property. Then once the tenant is in the property, your property manager's job will be to make sure your tenant pays, make sure they pay on time. If there are fines, to make sure they assess them, to make sure the property is taken care of, to make sure the property bills are paid, to make sure property taxes are paid, and to make sure all the work, if there's work that comes up, is taken care of. That way all you got to do is collect the checks. Again, it takes a little bit of work to get there, but once you get there, real estate can be completely passive. Investing in rental properties real estate does take more capital, but it's a great way for you to invest your money and own a physical asset that's paying you with passive income. 3. Put your savings into a high interest savings account. Most traditional banks are paying you next to nothing on your savings. So if you save your cash at Bank of America or Chase or one of these big traditional banks, chances are your savings account is giving you nothing no matter how much money you have sitting there. But thanks to the internet, there's been this growth of online banks which will pay you a much better return on your savings than you're going to get in one of these traditional banks, because these online banks don't have the same retail presence. They don't have to pay for rent, they don't have to pay for tellers, they don't have to pay for utilities at all these physical locations, and so they can reward you with a higher interest rate on your savings. The reputable online banks work just like your traditional physical banks. They're FDIC insured, your money is protected, and you can access your cash whenever you want. The real difference is one is online, one isn't. I have an account at an online bank and a physical bank where I keep most of my savings in my online bank because it pays me a better interest rate, while my checking account is at a traditional bank right now. One little caveat that I want to give you about these high interest savings account is that this high interest savings account is not a substitute to investing your money. This is just a way for you to save your money and get a little bit of a better return and not get all of your savings eaten away by inflation, because now this online bank account gives you a little bit of a better return. That way you can earn more money in your savings. 4th, you can monetize your knowledge by selling a class online at Udemy or Skillshare or Coursera. These platforms are marketplaces for education. And so let's say you go out and you create a class on how to be good looking. Now you create this class one time and then you can put it on one of these platforms. Once it is on one of these platforms, if people search how to be good looking, your class might pop up and then they can purchase your class, and if people purchase this class or watch your class, then you will get paid. Now each platform works a little bit different as to how the actual monetization process works, but in general that's how it works. Kind of interestingly, Minority Mindset originally back in the day started on Udemy, because I was working on this other business at the time and I got scammed by this fake marketing company and I had lost a whole bunch of money. And after I lost this money, I went onto Udemy and I created this class called How to Launch a Business Without Getting Screwed Over. I charged like $7 for it. It's not available anymore, but people started enrolling in this class and it created this kind of passive income for a little while until I removed the class, because I created this class and I put it on Udemy and then people started buying it. Now, we've become more mature. Instead of me selling a class on Udemy, I ask you to smash that thumbs up button below. Number 5 is you can invest in crowdfunded real estate. The alternative to investing in physical rental properties, which can take a lot of money and a lot of time and a lot of effort, is to invest in crowdfunded real estate, where now you're investing in a fund which gives you exposure to a whole real estate investment portfolio. This is what crowdfunded real estate is, and as the properties in your portfolio become more valuable, you make more money, and as these properties make income from rent, you make some dividends. The great thing about crowdfunded real estate is you don't got to do any of the physical work. You don't got to find the property or do the renovation or deal with tenants. All you got to do is invest your money into this fund, and you don't need as much money to invest in crowdfunded real estate because you're not buying the whole property. You can invest a little bit of money and get a piece of the pie. Again, if you want to learn more about how to do this, I'm going to link some resources for you in the description below. Number 6 is you can sell an ebook on Amazon. If you like writing, this could be a great one for you, because the way this works is you're going to write a book. It doesn't have to be super long, but you're going to write this book and then you're going to get it published on Amazon as an ebook. You don't got to worry about getting a publisher or do all that marketing or anything. You just got to get it on Amazon. Once it's on Amazon, you can do a little bit of SEO work, so when people are searching topics related to your ebook will pop up, and then anytime somebody buys your ebook, they will be able to download it and you get your royalties. Depending on how good your book is and what the topic is, once you get it up and running, this could be a way for you to make a few $100s a month consistently without really having to do much work once it's listed. Number 7, rent out your car. If you have a car that you're not using all the time, you can use a platform like Turo and rent your car out to somebody else and let them pay you for using your car. You can add in whatever restrictions you want when people are driving your car, but if your car is just sitting there doing nothing, you might as well make some money off of it by letting somebody else drive it. Number 8, if you got some extra space, rent out your home. If you have a basement that you're not using, or an extra room like a guest room that you're not using, or you're not going to be home for a little while, you can use this space to generate you some passive income by listing the space on a platform like Airbnb or VRBO, because then somebody else can stay in your home, your property, your extra space, and they'll pay you for staying there. Number 9, so this one isn't exactly passive income, but it can be an easy way for you to save a lot of money. If you have a mortgage, you can refinance. The whole idea behind refinancing your mortgage is you're going to take a current loan and you're just going to move it to a new lender at hopefully a lower interest rate. So now you have the same loan as before, but you're just paying less money because interest rates hopefully came down when it came time for you to refinance. So you can save a whole lot of money. I mean, some people can save hundreds of thousands of dollars by doing nothing except just refinancing their mortgage. Again, if you want to learn more about how to do that the right way, I have some resources for you in the description below. Number 10, you can do peer-to-peer lending and get that passive income through interest. The way banks make money is by lending you money. If you borrow $100,000 from the bank and you spend 10 years paying it off, then over those 10 years, the bank is going to be getting passive income from the $100,000 that they gave you because you're going to be paying interest to the bank every single month on the $100,000 that you borrowed. Well, you can copy the bank's model by doing peer-to-peer lending, where now you're using a platform. There's a bunch of these online where you're lending your money to somebody else, and now somebody else is borrowing your money. So you give them your money and then they're going to do something else with it. Maybe they're going to buy a car, or maybe they're going to pay down their debt. They're going to do something with your money, and then they're going to pay you interest every single month until they pay your money back. Just like everything else, there is risk involved here. I mean, there's a risk that the person who's borrowing your money can default, but this is where you got to do your own due diligence, find somebody good to lend your money to, and use a credible source. And if you do that, then this can be an easy way for you to generate passive income just by lending your money out. Number 11, you can enter the vending machine business. So the way this business model works is you can create your own vending machine company, or you can buy a franchise to a vending machine company, or you can buy an existing vending machine company that already has the machines out there, and you're going to put these machines into different places, maybe stores, wherever there's a lot of foot traffic. Then when people buy candy, they buy pop, they buy these things from your vending machine, then you will get a percentage of the profits. Your job is to make sure the vending machine is full and make sure that you're getting paid. The nice thing about the vending machine business is you don't need a ton of money to start. Like, you don't need the same type of capital you need to go out and buy a rental property, and it can generate you this pseudo passive income because you don't got to physically be there to sell the candy and pop from your machine. Number 12 is you can make money through affiliate marketing. Affiliate marketing essentially is when you are a commissioned salesperson on the internet. So let's say you start a blog where you're talking about how to burn fat. One of the things that you can do now is you can find a protein supplement that you really like and market the supplement on your blog. If people buy the supplement from your blog, then you get paid every time somebody buys a supplement. The key to making money here for affiliate marketing is you need digital traffic. So you need eyeballs, you need people to click on the link that you're marketing, and you need people to actually go buy whatever it is you're selling. And so you need some kind of consistent traffic source on the internet. Maybe you have a popular Instagram page or a popular blog or a popular podcast. And so you got to put in the work to kind of build this kind of presence on the internet. And once you do that, you can just place your affiliate link there and it will continue to drive you revenue as long as people are checking out your content. Number 13 is you can sell digital files on Etsy. If you're good at design, this could be a great one for you because now you can go out and you can create different digital files. Maybe you create a travel guide, or maybe you create some wall art. You spend some time creating this digital file and then you can put it on sale at Etsy, which is a marketplace. So if people are searching for motivational wall art and your image pops up and they purchase it, now you get paid. Number 14 is use your bank CD or certificate of deposit. Now, personally, I'm not a big fan of the CD as an investment source because the returns on CDs aren't the greatest, but it is a way for you to generate some passive income. You can think of a bank CD kind of like a glorified bank account where you put your money into this account. It's called a certificate of deposit, or CD for short. And when your money is in this account, it's going to be locked up for a certain amount of time. Maybe it's 6 months, maybe it's 5 years. You get to decide how long. And the longer your money gets locked up in this account, the better your interest rate is. The good thing about CDs is they pay you a better return than your savings account because you're not supposed to access it. If you access it early, you got to pay a fee. But because it gets locked up in this account, you get a better interest rate. There's no real work on your end because you don't got to do anything except go to the bank and tell them that you want to put some money into a CD. You're not going to get the best rate of return, but if you're scared of investing your money, then this could be an option for you. Number 15, you can be a strategic digital marketer. So this was actually something I learned from one of my friends who was doing this. So my friend, he has a lot of connections with business owners and he's made a lot of friends with these entrepreneurs who are starting these businesses, some of them digital, some of them physical. And he used to go go and do their digital marketing. But then he wasn't really a fan of it. He got kind of tired of doing the digital marketing. So what he found out that he could do is he could partner with other companies and other people and have them do all the digital marketing, because he wasn't doing super complex stuff. It was mainly just creating social media posts and posting them. And so he found these people that could do this digital marketing for them. And so now all he does is he finds these businesses that want digital marketing done, and he gets them on a retainer. Maybe it's $1,000 a month or $2,000 a month. And then he gives these companies to the people that he's working with, and he'll pay these people half of whatever he's making. So if he's making $1,000 a month, he'll pay these people $500 a month to do the digital marketing, and he'll keep the other $500. And he doesn't really do anything except make sure that the work is done. But now that he's found good people, it doesn't really take that much work at all. Number 16 is use a cashback credit card whenever you shop. If you are a disciplined spender and you will use your credit card like cash, and you're not going to use your credit card to buy anything that you normally wouldn't with cash, and you're going to pay off your entire credit card balance in full every single month, and you never pay a penny in interest on your credit card, then you can get rewarded for using your credit card the right way, because you can use a cashback credit card that's going to pay you something like 1% to 5% in cash back every time you swipe your card. So if you go to the restaurant and you spend $100 on dinner, you spent $100, but you're going to get a little bit of cash back just because you used your credit card instead of paying with cash. Again, the key for this one to work is you got to make sure you're a disciplined spender, because if you start getting excited about this cash back and now you're spending 10% more just because you think you're going to get 2% cash back, you are losing in the credit card game. The whole purpose of this is to make your regular purchases with a credit card. That way you can make some money in cash back. Number 17 is you can start a drop shipping e-commerce store. Now look, if you've been on the internet and you've ever kind of searched these entrepreneurial things before, chances are you've seen a bunch of people selling classes on drop shipping, and it has been very saturated recently. But the thing you got to understand about drop shipping is, at the core, all it is you are selling a product on the internet, whether it's through your own e-commerce store or whether it's through Amazon. All drop shipping is now, instead of you creating your own product and having to manage the inventory and having to buy all the inventory up front, you're working with a manufacturer where anytime somebody buys something, whether it's through your Amazon store or through your physical online store, you are not the one that's having to physically ship it out. This order should go to your manufacturer, and the manufacturer is going to ship it out. And so if you can find a good product, maybe it's a kitchen product, maybe it's a clothing product, and you can market it on Amazon or your own store. Maybe on Amazon you do good SEO, on your own store you do some Instagram marketing, and people start to buy it. Well, now these orders should go directly to your manufacturer, and your manufacturer is going to ship them out, and you get to keep the difference. Number 18 is you can invest in REITs, which are real estate investment trusts. This is another way for you to invest in real estate without having to physically invest in rental properties. A REIT is a company that invests in real estate, and these companies, these REITs, some of them trade on the stock market. And so what you can do is you can find one of these REITs on the stock market, and you can buy shares of this REIT. Now, when you own shares of this REIT, you own shares of a company that invests in real estate. So you're getting indirect exposure to real estate, because now you're not getting direct exposure to the property, you're getting exposure to the company that owns the property. But the thing that makes REITs unique is REITs are required by law to pay out 90% of their taxable income in dividends to their shareholders. So the shareholder is you, the person that owns their stock, and if you own their stock, you will, chances are, get a higher dividend than most typical companies, because REITs are required by law to pay out 90% of the taxable income through dividends, and their taxable income comes through rent. Number 19 is you can start a lead generation website. If you're a tech-savvy person and you're a fan of digital marketing and SEO, then what you can do is you can create a website that is generating traffic, and then you can sell this traffic to different businesses. For example, let's say that you have this partnership with an appliance store in your area, and then you can go out and you can create a website that's generating traffic for people that are interested in getting a new microwave or a new stove. Then what you can do is you can sell this traffic to a store, an appliance store in your area that's looking for people who want to buy a new stove or a microwave. The whole idea behind this is you're probably going to work with a few appliance stores in your area, because these companies might not have the best web traffic, and then they're going to pay you for every lead that you send them. And so this will all be digitalized. So anytime somebody from your website goes to one of these stores or fills out a form at one of these stores' websites, you will get paid. Number 20 is you can sell photos on Shutterstock. If you like taking pictures and you go on vacation and you take these beautiful photos of the Grand Canyon, now you can just keep these photos in your photo album, or you can also take some of these photos, put them on Shutterstock, and if somebody uses one of these photos, they're going to have to pay you money. You're not going to make a ton of money if one person uses your photo, but if you like taking pictures and you take a lot of pictures, pictures, this can be another place for you to put your pictures, and now you can monetize on the pictures that you're already taking. Number 21, you can rent out your parking spot. So this one's reserved for those of you that live in big cities, because if you have an extra parking lot, you can rent it out to somebody else, let them use your parking lot, and they're gonna have to pay you every single month. One of my good friends lives in downtown Seattle, and the condo that he lives in gives him 2 parking spots, but he only has 1 car, and so he rents out his second parking spot for $300 a month. And this is no work that he has to do. He just lets somebody else use his parking spot, and every month he gets an extra $300. Number 22, you can be a house sitter. This one takes a little bit of work to get started, but the whole idea behind house sitting is somebody might not be home for a week or a month, and they don't want to keep their home empty, and so they would pay you to kind of live in their home for the time that they're not there. The thing with this is you got to verify yourself as being a credible person and a trustable person, but once you can do that, then you can get paid to just live your life in somebody else's house because they just want somebody to live there while they're gone. Number 23, you can buy an online blog that's already generating revenue. So blogs on the internet can make money a few different ways. They can make money through advertising, they can make money through sponsorships, they can make money through affiliate deals. And so if a blog is already making money, sometimes a blog owner is gonna wanna get out of the business and they'll just sell this blog, take the cash, and then go do something else. This is where you can come in, find a blog that's already generating revenue, that's already established, and purchase it, and now you have just bought a new income stream. There are a ton of sites on the internet to help facilitate these type of transactions where you can go out and buy an already existing business on the internet like a blog. The thing that you want to understand here is if you've never operated a blog or you have no idea of what the niche is, like if you're buying a fitness blog and you know nothing about the fitness industry, it's going to be a little bit tough because once you buy the blog, you do got to make sure it's maintained, and if you're not doing it, you can hire somebody else to do it, but you got to have a little bit of expertise because if this blog just kind of goes stale, then you're going to see its revenue go down. Number 24, you can use your car as an advertising billboard. If you don't mind using your car as a billboard for somebody else, then you can go to a website like Carvertise and Rapify and Vugo, and these companies will pay you because they work with other companies. They'll pay you $100 to $200 a month, depending on how much you advertise and what you're working with, to just market somebody else's company on your car. And finally, number 25, I couldn't make a video on this topic without mentioning creating digital content. So this one isn't like pure passive, it's more kind of like pseudo passive because it takes a ton of work in the beginning. But if you can build this content hub on the internet that people are going to, whether it's an Instagram page or a blog or a podcast or maybe even YouTube, then you can continue to generate advertising dollars or sponsorship dollars or affiliate dollars without you really having to do that much more work because you have built this central hub of content, and anytime people go on it, you will get paid. Here's the thing, you can make a lot of money creating digital content, but in order to continue growing the revenue, you got to keep creating more content. Like for example, this video that you're watching right now will make me money for as long as this video is up there. Like if you're watching this video a year from now or 2 years from now, that means our company is still generating revenue today for the video that we created back in 2021. Anytime somebody watches our video, YouTube pays us a little bit of money. Now, it's not a ton of money that we're making per view. I think YouTube pays us something like a penny per view. So it's not a ton of money per view, but it's something that can continue to generate your revenue for years into the future, because once you create this content once, people can watch it for years and years and years. We're gonna jump back into the video in just a second, but before we do, I wanna tell you very briefly about Market Insiders, our investing coaching program. If you've been thinking about investing your money into the stock market, the real estate market, or the cryptocurrency market, and you're looking for some extra guidance, this is what Market Insiders was created for. It is not a class. Market Insiders is a coaching program where every week you get access to a real estate class, a stock market class, and a cryptocurrency class, which is live, led by one of our investing coaches. Our investing coaches are not investing gurus. These are real investors who've been investing for years, they've gotten great returns, and they have the money behind them. I'm talking about hundreds of thousands, if not millions of dollars invested themselves, and they're teaching from their experiences and their failures. That way you can learn from them every single week. Now, the cool thing about Market Insiders is you get access to more than just the weekly coaching. You get the weekly investing coaching, you get access to all of our previous recordings, you get access to our investing classes, and you also get access to our private Discord community. That way you can chat with other investors. So if you're trying to get started as an investor in the stock market, the real estate market, or the cryptocurrency market, or you're trying to figure out how you can be a better investor and get better returns, then Market Insiders is for you. That way you can get that kind of handheld coaching, guidance, because now it's not just a class where you're going to be left hopeless trying to figure it out for yourself. Every week you're going to get access to stock market, real estate, and cryptocurrency coaching sessions, and it's all included. Now, if you're skeptical about all this, I get it. That's why you don't have to pay a penny today. You can try out Market Insiders for free with our 10-day trial. During the 10-day trial, you'll get access to everything. You can join the coaching calls, you can watch the previous recordings, you can attend the classes, you can go through the Discord and chat in there, you can ask your questions, and then you can see if it's right for you. If during those 10 days you realize, I hate this sucks, well, then you can quit and it's not gonna cost you a penny. But if you go through it and you say, wow, this is amazing, I'm blown away by the education, well then you can stay. And if you decide to stay, it's not gonna cost you an arm and a leg. Market Insiders cost less than the cost of going out to eat. It costs less than $30 a month. So if you wanna try it out, I'll put the link to how you can learn more and join Market Insiders with a free trial in the description below. It was very important to me that you feel comfortable investing in your financial education. That's why I wanted to make sure that you had nothing to lose and everything to gain, which is why if you wanna learn more, you can get started with a free trial. That way you don't have to commit to spending a penny until you know if it's right for you or not. So if you want to learn more and try out Market Insiders and see if it's right for you, I'll put the link to where you can get started with your free trial in the description below. We're living in an economy where having a side gig, a side hustle, or a side business is more important than ever. For 80% of Americans, you will need some sort of second stream of income. That way you can afford your lifestyle. Now, for the majority of people, this is bad news. Oh my God, I have to go out and find more work. But if you have that minority mindset, this can be a great opportunity for you to really just pad on your income and do something that you love that can provide you with a whole lot more freedom in the future if you know what you're doing. Back in the day, you had households with just one working person. You had the man that went to work, and then you had the woman that stayed at home who did not work. Now, that was just how society functioned at the time. That was how the economy worked. But if we look at this just from a financial perspective, that one income allowed people and families to be able to afford life and groceries and vacations and buy a home. Nowadays, it's two income households. You have the man, the woman, or whatever the partnership is, however the household dynamics are. You have two people that are working to support their household. Now, even with these two people are still struggling financially. You would think that now people are making double the money, so it'd be much easier for people to go out and build wealth and become successful financially, but that's not the case. People are broker than ever now because we're seeing the cost of living around us go up very fast thanks to inflation. And we're also seeing our standard of living grow very quickly because a couple of decades ago, there was no such thing as an iPhone or a smartwatch or Lululemon leggings. And so we've seen the growth of technology. So we want more things, we want nicer things, which also means that now we need more money in order to be able to survive. The next generation is going to be, not only are you going to have two incomes, but you're also going to have a side gig or a side hustle. This is where you want to get educated and get on top of this curve right now. That way you can start earning more money. That way you have more money to invest. That way you have more money to build wealth. And that way you have more money to have your financial freedom. And this is so important now because now we're also going through this great resignation. We're going through a major change in our work system and our environment. So you need to understand what's going on. That way you can capitalize on the system and what's going on around us. That's why today I want to talk about how and why the economy is shifting. Then I want to talk about some of the different ways that you can earn money, and then I want to talk about the things that you need to know about what's coming in the future. It's crazy that it took a pandemic, the 2020 pandemic, to change our economy, and we still haven't seen the full effects of how our economy and the job market is going to change yet because we're going through something called the Great Resignation right now. When the pandemic hit, you had a few things happen. You had some people who were now able to work from home, and they were making the same amount of money as before or more money because now these companies started making more money, they started giving bigger bonuses to their employees, and they might have gotten stimulus checks on top of that. And then you had some people that were not able to work from home. They had to continue working their jobs, even if it was a minimum wage job, and they didn't really get any sort of hazard pay from their company, but they did get some stimulus checks from the government, but still, they were still making money just from their jobs, but they had to go to work every single day, and they also had the potential risk of getting sick. And then you had the people that didn't have to work from home because now their companies just shut down. And so now they were getting unemployment checks and they were getting stimulus checks. And in some instances, these people that were sitting at home playing video games all all day were making more money than the people that were going to work every single day to get paid. This started to frustrate a lot of people because people go to work to get paid. Now, obviously, you should enjoy what you do, you should love what you do, but if you don't do what you do to get paid, then you should just ask your boss not to pay you. So people were getting frustrated because now they're either working or not working, and the imbalance in the economic system wasn't making sense to a lot of people. So people started to rethink what is important to them, how should they get paid, and what do they want to do. Then as more and more people were able to work from home, they started to realize that, hey, I'm more productive when I'm working from home, and I can do more things that I like, and I can go to the gym when I want, and I can get my car taken care of when I want, and I can spend more time with my kids when I want. So people were now starting to realize that I like this flexibility of being able to work from home, because when I'm in the office, I'm just working on the computer anyways. So why do I need to be sitting at a designated desk for 8 hours a day when I can just work from home and kind of work throughout the day? People who are working from home are working longer hours because now they're working from morning to night, but they're working on their own schedule. And that's when some companies started to say, all right, now you need to come back into the office again like normal. Now, some people started to get irritated. They said, why do I need to go back into the office again when I was working just fine from home? In fact, I was being more productive from home. I was doing more work from home, and I was able to do a whole lot more things on my day because now I don't got to sit in traffic and I don't got to commute. So why do you need me to come into the office? And this created the next shift in the economy, which was the Great Resignation. We were already facing a massive labor shortage across the country, where you have tons of companies that are looking for work, they're looking for employees, but you have a lot of people that are not working. And then you started to see the biggest voluntary exodus of people who were leaving their jobs voluntarily. They weren't leaving their jobs because they weren't getting paid well. They were leaving their jobs because they didn't like the way they were treated at their jobs. They didn't like their lifestyle, because now for the first time, people started to look at their jobs not just as a paycheck, but as something to complement their lifestyle and their lives. Because now when people are looking for a job, they're not just looking for how much money am I going to get paid. They're looking for how much value am I going to get out of this job? Am I going to be happy here? Does the job align with my lifestyle? Meaning, can I work from home or do I have to work from the office? Does it align with my morals and regarding masks and vaccines? And is this job something that I want to do? And then they look at your pay. So people are looking at jobs very differently now than they did before. And so people are starting to quit because they're realizing that the job that they have doesn't fit their values. Now, on an economic level, this is creating a whole bunch of issues in the economy because companies are struggling to find work, they're struggling to find labor, they're struggling to grow, they're having to pay more money to employees, which is good for employees, bad for the company because now they're not making as big of profits. And so it's creating a very weird shift in the economy, and we are going to see some of these old dinosaur type companies die because they're not willing to get with the times. But it's great for employees, it's great for people, because now for the first time, you have the upper hand. You can now go look for jobs and you can find something that better fits your lifestyle, and companies are fighting for employees. They're fighting for people. They're fighting with better pay. They're fighting with a better lifestyle. They're fighting with better benefits. So this is good news for employees. And that's exactly what we did here at the Minority Mindset. As soon as this pandemic hit, we started to follow the Dropbox model. Dropbox was one of the first tech companies to create something called the virtual first model, which means that, hey, you don't have a designated desk anymore. You can come into the office when you want, or you can work from home, you can work from the beach. All you have to do is make sure that you're getting the work done. Don't miss the meetings, don't miss the deadlines. So on the employment level, we are seeing a major shift through this Great Resignation, where you have a lot of people voluntarily leaving their jobs, and this is creating a big gap in the employment marketplace. Then on the inflationary side, you have the cost of living going up very fast. You have the Federal Reserve Bank and the government still printing money. They're still trying to create more inflation because that's the only way that the United States government is going to be able to afford their $29 trillion worth of national debt, because when you see more inflation, that means that the value of the dollar goes down, so the United States government can then pay back the $29 trillion of national debt with cheaper dollars. So the government and the Fed want to create more inflation, which is hurting the average person because now the price of things keep going up. So you have this higher cost of living, and now if you go to work a job, one job isn't enough. Two jobs aren't enough. What people need now is they need their jobs, and then they need some sort of additional supplemental income in order to be able to survive in this economy. Luckily, we live in this technology age where it is more accessible than ever to get some sort of side hustle or side gig where you can work some additional hours whenever you want and earn some extra cash. You can drive for Uber, or you can drive for Lyft, or you can deliver food through Grubhub or Uber Eats. Or you can deliver groceries through Amazon Fresh or Instacart. Or if you want to be a little bit more involved, you can create your own side hustle. It's kind of like creating your own small business, but now you can be a freelancer and you can help other businesses earn more money. You can help other businesses with their business, and you can do this from your own home on your own schedule by being a freelancer. So if you go to a site like Fiverr or Upwork, what you can do is you can post your skills. Let's say you're good at writing, or you're good at graphic design, or you're good at video editing, or you have a cool voice and you can be a voiceover artist, or you're really good with accounting and you can help businesses manage their money better, manage their cash flow better. You can post these skills on these websites. Then, as a business needs more work, instead of hiring an employee, they can hire a freelancer like you. They can go onto these websites and say that we are looking for somebody to help us with our writing. And now if you post your skills and a business posts their advertisement to find some sort of writer, well, now you two can meet. You can apply for the business a job, or the business can find you, and now you can provide your writing services for the business, and the business will pay you for your writing service. The business is not going to tell you where to work. They're not going to tell you what hours you need to work. I mean, they might, depending on what the job is. But in general, they're not going to tell you that you have to be on the computer from 9 a.m. to 5 p.m. In some occasions, you will see that, but in most occasions, you will not. What the business will do is they're going to tell you what they want, how long of an article they want, and what they want the article to be about, and they'll tell you what they're willing to pay you. And if this is acceptable to you, you can accept it, and now you just have a new side gig that you can work on weekends or in evenings or whenever you want, and now you can do this work and earn some extra cash because of it. And depending on how entrepreneurial minded you are, this can lead to a whole lot more opportunities, because now not only can you start doing this writing work for other businesses, but you could potentially create your own agency where now you have other writers that work under you, and so when people come to you for writing work, you can designate this not just to yourself but to other writers, and so now you start to build your own business. But again, this takes a lot more work, and now you need to really have the entrepreneurial mind to build this sort of agency. Or if you are even more entrepreneurial minded, then you can look at starting your own business, or you can look at creating content in today's economy. Let me start by talking about content, because this is one of the things that is very easy to understand. Like, people understand that if you build a big YouTube channel, you can make a lot of money. Now, it is very hard to build a YouTube channel. You have a lot of competition. But the thing that's interesting now is you also have the growth of shorter videos. Things like TikTok and Instagram Reels, which has just created a brand new industry, a whole new opportunity for people to create content. I was at a financial conference in Austin not too long ago, and when I was there, I met so many young TikTokers between the ages of 19 and 28 years old who were making tens of thousands of dollars a month. So somewhere between $20,000 and $50,000-$60,000 a month through their TikTok page, and some of them hadn't even been on TikTok for a year. These are people that understood that a lot of people were moving to TikTok quickly, so they got onto TikTok, they started to understand the TikTok trends, and they started to make viral videos, and then they started reaching out to companies to sponsor the videos, and now they're making a lot of money on TikTok by making these videos. Now, obviously, you want to now take this money and scale it into a real business, because you don't want to just rely on the TikTok algorithm, because if the algorithm turns off or something kind of fades away, well, now you're screwed, because now you went from earning $20, $30, $40, $50,000 a month to zero. You never want to be in that situation, so you want to be smart, and if you were in that position where you're making that money, you want to reinvest it into build a real sustainable business. But there are so many ways for you to create content, whether it's TikTok or YouTube or podcasts or Instagram or your blog. There are so many ways for you to create content, and then you can build an audience online. And once you build an audience, there are so many different ways that you can monetize. That way you can build a brand. Now again, this doesn't mean that you have to be a content creator. Not everybody has it in them to be a content creator. But if this is something that you're interested in, it is an opportunity now that is accessible to anybody. You can start a YouTube channel with less than $100. I started the Minority Mindset YouTube channel with less than $100. I started making videos off of my phone with a tripod that I bought off of Amazon for 20 bucks. I bought a $25 light, and that was it. And now our YouTube channel has over 1 million subscribers, and we have transformed our YouTube channel into a full financial education and media company, and we are one of the fastest growing financial education and media companies on the internet. You saw a similar boom in the cryptocurrency market. There are so many newfound millionaires in the cryptocurrency market because cryptocurrency was one of the biggest redistributions of wealth ever, because you had so many people that got onto it who were losing trust with the Federal Reserve Bank and the government, so they started buying cryptocurrency, and then more and more people started to adopt cryptocurrency, and then they were able to ride up the wave and build a lot of wealth because of it. There's still a lot of opportunity in the cryptocurrency market, but you just don't want to be one of the people that's trying to chase the hype, that's trying to get rich quick. You want to be one of the people that's educated and then make smart decisions based off of your now education. Or if you have an itch to create a product, well, now you can create your own product and you can sell it on the internet. The internet has made selling your product and marketing your product more accessible than ever because the internet is really just a place where people hang out digitally. Before, if you created a product, it took a long time to create a product and you had to go through all the efforts of creating a product. And once you did, then you had to open up a store. And then people had to come to your store and then hopefully people would like your product. So the success of your business depended on either where your store was located or what stores your product was in. And it's not always easy to get your product into a store, even if you have a good product. Nowadays, it's much more accessible because you can market your own product on your own e-commerce store. You can sell it on Amazon. And so you have the accessibility of showing your product to the world. Does that mean it's easy? No. It is very hard because now it's accessible to everybody, but it is accessible. And if you're willing to put in the work, now you can create your own product and then you can market it on the internet. And you don't even have to worry about trying to get it into stores. You can start selling immediately. You just have to understand marketing. The number one skill you need in order to make money on the internet is marketing. Now, when most people hear marketing, they think of the traditional marketing of how do I purchase TV advertisements and commercials. That is not what marketing means. Marketing means how do you get your product seen in front of people? And this doesn't just have to be your product, it's your brand. How do you get your product seen in front of people? You have the organic marketing and you have the paid marketing. There is such a big gap between what people think marketing is and what marketing really is on the internet. And if you want to be able to make money on the internet, you have to be able to market because all marketing is getting eyeballs on your brand or your product. So if you know how to get eyeballs on your brand or product, you will be able to make money on the internet. And if you can be very good at it, there's no limit to how much money you can make because now you can sell your own product. People can pay you for your marketing services. You can sell other people's products. I mean, there is an infinite amount of money in this space because if you know how to market your products, if you know how to get eyeballs on the internet, well, now you have people's attention and everybody will be willing to pay you to understand how to market their brands. The economy is shifting and the pandemic helped us shift into this digital world even faster than ever. And so what you need to do is you need to understand this and you want to be able to capitalize on this shift. That way you can get a piece of the upside because it is more important than ever due to the higher inflation and the higher standard of living. And you don't want to be one of the people that's not going into debt to afford these nice things. You want to be able to afford these things, which means you're going to need to earn more money. And one of the most accessible ways to do that is by understanding how to earn some more money on the internet. Okay, almost everything is negotiable if you ask. Worst case, they just tell you no. One of the simplest and least painful ways to spend less money every single month is just to negotiate your bills lower. So what I want you to do is start by taking all of your utility bills. So your cable bill, your internet bill, your phone bills. Take these bills and